Shalom. All praises go to the Most High Yahweh Bashim Yahweh Shai. Double honor unto the elders, a great millstone for the teachings of the scriptures of the Bible. And I just shalom to all the Akim across the world. I'm praying that I'm talking to the elect, and that I be one of the elect. I was surfing the net looking for the downfall of America, and I came across this site, moneynews.com, and it's dated Monday, 22 July, and it's 22 July right now. But I think this was dated in 19 July, on 19 July 2003, but it says 21. But the thing is, I checked this when it was 20 July, but that was on a Saturday. So yeah, here. That was on a Saturday, so I couldn't do it because I was out there on the streets doing the work, preaching. That's doing the work. So I'm gonna just go over it right now because I got time. Most are willing. So I'm gonna just read into it. The downfall of America, and these cave people know it. Billionaires dumping stocks. Economist knows why. Despite 6.5% stock market rally over the last 3 months, a handful of billionaires are quietly dumping their American stocks, and fast. Warren Buffett, I forgot who this guy is. I think he's some kind of American person. Yeah, he is, but some kind of rich dude. He looks like a Rothschild or something. He looks like a Rockefeller, but I do not know. But he's some kind of so-called American in this money guy in America. That's what I mean. Who has been a cheerleader for the U.S. stock for quite some time, is dumping shares at an alarming rate. He recently complained of disappointing performance in dyed-in-the-wool American companies like Johnson & Johnson, Procter & Gamble, and Kraft Foods. So he's actually they lose some money, man. They lose some money. It goes back to the scriptures. There shall no more work be in Egypt, for the grinding has ceased. So I'm going. I didn't even get a chance to pre-read this, so I'm just reading it as for the first time as I'm recording it actually. In the latest filling of Buffett's holding company, Berkshire Hathaway, Buffett has been drastically reducing his exposure to stock that depend on consumer purchasing habits. Berkshire sold roughly 19 million shares of Johnson & Johnson and reduced his overall stake in consumer product stocks by 21%. Berkshire Hathaway also sold its entire stake in California-based computer parts supplier Intel. And as everybody knows, Intel is one of the leading computer processors on this planet. One of them. With 70% of the U.S. economy with 70% of the U.S. economy depends on consumer spending, Buffett's apparent lack of faith in these companies' future prospects is worrisome. Unfortunately, Buffett isn't alone. Fellow billionaire John Paulson, who made a fortune betting on his subprime mortgage meltdown, is clearing out of U.S. stocks too. So even this guy, John Paulson, this is great news, man. This is great news because It's a good thing to see these cave people just, you know what I'm saying, showing signs of retreat. Actually, retreat. Who made a fortune? Okay, during the second quarter of the year, Paulson hedged fund Paulson and Co. dumped 14 million shares of J.P. Morgan's Chase, or whatever. The fund also dumped its entire position in discount retailer Family Dollars and consumer goods maker Sara Lee. Finally, billionaire George Soros recently sold nearly all of his bank's stocks, including shares of J.P. Morgan Chase. See, everybody's dumping J.P. Morgan Chase. You know what I'm saying? Citigroup and Goldman Sachs. Between the three banks, Soros sold more than 1 million shares. So why are these billionaires dumping their shares of U.S. companies? After all, the stock market is still in the midst of a historic rally. Real estate prices have finally leveled off, and for the first time in 5 years are actually rising in many locations. And the unemployment rate seems to have stabilized. It's very likely that these professional investors are aware of specific research that points toward the massive market correction as much as 90%. One such person publishing this research is Robert Wiedemer. Let's go check his face out. Robert Wiedemer. Yeah, this guy. An esteemed economist and author of the New York Times best-selling book Aftershock. Editor note: Wiedemer gives proof for his dire prediction in this shocking interview. Well, he probably has the interview right over here. Oh, it's a video. Let's see how long it takes. The Aftershock Survival Summit. Oh, it's the same video. Yeah, it takes about 40 minutes. Now I'm not gonna watch that. I'll put the link in the description box. Before you dismiss the possibility of 90% drop in stock markets as unrealistic, considering Wiedemer's credentials. In 2006, Wiedemer and a team of economists accurately predicted the collapse of the U.S. housing market, equity markets, and consumer spending that almost sank the United States. They published their research in the book America's Bubble Economy. The book quickly grabbed headlines for its accuracy in predicting what many thought would never happen, and quickly established Wiedemer as a trusted voice. A columnist at Dow Jones said the book was one of those rare finds that not only predicted the subprime credit meltdown well in advance, it offered Main Street investors a winning strategy that helped avoid the 40% losses that followed. These guys know about it, man. These guys know exactly what's going to happen. You know what I'm saying? Because they orchestrated it. That's why that guy Wiedemer in 2006 made this book, published this book. The chief investment strategist at Standard & Poor's said Wiedemer's track record demands our attention. And finally, even they want to investigate on him. I'm saying the ones who are not in the know. And finally, the foreman, but not all of them are in the know. Let's say Jello Salente. I don't follow him. I just watched a couple of times, and he brings out good stuff. Not all of them are juiced in, but you could say a lot of them are. And finally, the former CFO of Goldman Sachs said Wiedemer's presence in his first book, Pre-Scenes, in his first books, lend credence. These words, man. I never even met these words. I actually, if I know what it means. If I check it up, lends credence to a new warning. This book deserves our attention. In the interview for his latest blockbuster, Aftershock, Wiedemer says the 90% drop in the stock market is a worst-case scenario and most likely challenged his claim. And the host quickly challenged his claim. The thing is, I'm not gonna read too much because I'm gonna put the link in the description box. But the thing is, the thing is clear. America has fallen. And let me just read on till here. Wiedemer calmly laid out a clear explanation of why a large drop of some sort is virtual certainty. So he actually knows. It's certain to him. And to the men of the Lord Most High, the Lord Yahweh Shai, Yahweh Bashem Yahweh Shai, the Most High Yahweh Bashem Yahweh Shai. They know it's certain also, but it won't be virtual. I know he's not talking about virtual as in virtual reality, as in fake reality. But I'm just making a joke, you could say. But anyway, which is not a joke because it's going to be physical. Yeah. It starts with the reckless strategy of the Federal Reserve to print a massive amount of money out of thin air in an attempt to stimulate the economy. Now, this goes back to what the teachers and the elders and the teachers, I should say, the elders and the teachers of Great Millstone, GMS, is saying that they print money out of fine air. And I actually know what they mean, because I know some people actually don't know. But you have a country called, well, it's a South American country. Anyway, when I lived there, it was like you could buy stuff for like 1 cent, right? But after I moved here to Europe, that nation fell. Now I'm saying last time I went, oh no, not the last time, the time before that, maybe like 10 years ago, the same candy that you could buy for 1 cent cost I think $35 $35 in their money, not 35 US dollars. Now I'm saying $35 in that money, in that currency of that country. So I actually totally understand what he explained, that if you print out too much money, it goes less in value because there's too much. It's like too many women on the planet Earth, which there are. These women are not worth more than what they are made out to be. Okay, it's like fine gold. You can't find it nowhere else. Just like the book of Isaiah, chapter 13. I think it was verse 12 or something like that, or 11. But it says the Most High will make a man, an Israelite man, more precious than fine gold. Anyway, these funds haven't made it into the markets and the economy yet, but it is a mathematical certainty that once the dam breaks, the money passes through the reserve and hits the markets. Inflation will surge, said Wiedemer. So once you hit 10% inflation, 10-year treasury bonds lose about half their value, and by 20% in value in all is all but gone. Interest rates will increase dramatically at this point, and that will cause real estate values to collapse, and the stock market will collapse as a consequence of these other problems. See, That's what this guy is talking about. And with that, shalom. You can check it out yourself.